Hello everyone, welcome back to my channel. If you're watching this right now, you need to pay extremely close attention, because the global financial system is facing a perfect storm that very few analysts are talking about. We're in a moment of unprecedented two-front crisis, a geopolitical firestorm in the Middle East that's threatening to send oil prices soaring past $100 a barrel and reignite global inflation, and a regulatory reckoning in the US that's finally cracking down on the dangerous influencer finance bubble that's been exploiting millions of young investors over the last 12 hours alone. We've seen events unfold that are going to reshape markets for the rest of 2026. And today, we're breaking down exactly what's happening, why it matters to your portfolio, and what you need to do right now to protect your wealth. This isn't just about oil prices or a single app. This is about a fundamental shift in the global financial order, and if you miss this, you're going to get left behind. Let's start with the elephant in the room, the escalating tensions between the United States and Iran. Over the last 48 hours, we've seen a dramatic escalation in rhetoric, military movements, and the very real risk of a full-scale conflict that could shut down the Strait of Hormuz, the choke point through which 20% of the world's oil supply flows every single day. CNBC senior analyst Steve Eisman just issued a stark warning: if US-Iran tensions escalate into a direct military conflict, the US is facing a new round of inflation shock that could completely upend the Federal Reserve's entire policy path. Let's break this down, because this is make or break for every investor, every consumer, and every central bank on the planet. First, let's talk about energy costs. Right now, WTI crude is already trading above $85 a barrel, and Brent is pushing $90. But analysts at Goldman Sachs are now warning that a full closure of the Strait of Hormuz could send oil prices spiking to $150 a barrel in a matter of days. Even a limited conflict that disrupts shipping could push prices well above $100 a barrel, and that's a game changer. Why? Because oil is the backbone of the global economy. Every single product you buy, every service you use, every mile you drive, is tied to the price of oil. When oil prices surge, transportation costs skyrocket, which pushes up the price of food, goods, and services across the board. That's exactly how inflation gets reignited, and that's exactly what the Federal Reserve has been fighting for the last 3 years. Let's remember, the Fed has been signaling rate cuts for 2026, with markets pricing in 3 to 4 rate cuts starting as early as June. But if oil prices surge past $100, and headline inflation jumps back above 4% or even 5%, those rate cuts are gone. In fact, we could even see the Fed reverse course and hike rates again, which would send shockwaves through the stock market, the bond market, and the housing market. This isn't just a hypothetical. We saw this exact scenario play out in 2022, when the Russian invasion of Ukraine sent oil prices surging, inflation spiking to 9%, and forced the Fed into the most aggressive rate hiking cycle in 40 years. And now, we're staring down the exact same trigger, but with even more volatility in the Middle East. But it's not just oil. We're seeing this fear play out across every asset class. Gold, the ultimate safe haven asset, just hit a new all-time high above $2,400 an ounce, as investors pile into protection against geopolitical risk and inflation. Bitcoin, which has become a digital safe haven for many investors, is also surging, as market participants look for assets outside of the traditional financial system. And let's talk about the private credit market, which has been a huge source of leverage in the global economy over the last decade. Wall Street is now sounding the alarm about the fragility of private credit, as higher for longer rates, geopolitical risk, and slowing economic growth create a perfect storm for defaults. This isn't just a Wall Street problem. Private credit funds are tied to pension funds, 401(k)s, and everyday investors' retirement savings. If the private credit bubble pops, it's going to hit Main Street hard. The bottom line here is simple: the Fed's biggest fear right now is oil prices spiraling out of control. They've spent trillions of dollars and hiked rates to 5.5% to bring inflation down, and a Middle East conflict could erase all of that progress in a matter of weeks. That's why we're seeing such extreme volatility in the markets right now. Investors are pricing in the very real risk of a 2022-style inflation shock all over again. But the crisis isn't just coming from overseas. Right here in the United States, we're seeing a regulatory storm that's finally targeting the dangerous, influencer-financed bubble that's been exploiting millions of young investors, and it's about to blow up in a huge way. Last week, U.S. Senator Elizabeth Warren, a longtime critic of predatory financial products, officially launched a full investigation into the Step app, a teen-focused finance app that's been promoted by global mega-influencer MrBeast to millions of his young followers. And this isn't just about one app, this is the opening shot in a full-scale war on influencer finance that's going to reshape social media and financial regulation forever. Let's break down what's happening here. Step is a finance app marketed to teenagers, offering debit cards, savings accounts, and even credit-building tools. But the problem? It's been promoted heavily by MrBeast, one of the biggest influencers on the planet, with over 200 million YouTube subscribers, most of whom are under the age of 18. MrBeast has done multiple videos promoting Step, calling it the best way for teens to manage their money and giving away millions of dollars to his followers who sign up. But Senator Warren is calling out the app for predatory practices, high fees, misleading marketing, and pushing credit products to minors who have no credit history and no understanding of financial risk. And here's the core issue. When an influencer with 200 million followers promotes a financial product to kids, who is responsible for the risk? Is it the influencer? The app? The regulators? This isn't just a problem with Step. We've seen influencer finance explode over the last 5 years, with TikTok, Instagram, and YouTube full of finfluencers promoting crypto, meme stocks, high-risk trading apps, and predatory financial products to millions of young, inexperienced investors. We saw this during the 2021 meme stock craze, when influencers promoted GameStop and AMC to their followers, leading to billions in losses for retail investors. We saw it with the FTX collapse, when influencers promoted Sam Bankman-Fried's exchange to their followers, leading to $80 billion in losses. And now, we're seeing it with teen finance apps that are pushing credit to minors. The Step investigation is a watershed moment. Senator Warren is not just going after one app, she's going after the entire model of influencer-led financial marketing. She's demanding answers from MrBeast, from Step's CEO, and from the SEC about how these products are being regulated, and how we're protecting young investors from predatory marketing. And this isn't the only front in the regulatory war. Ripple CEO Brad Garlinghouse just issued a scathing rebuke of the U.S. government's double standard on crypto regulation, slamming the SEC for targeting innovative crypto companies while letting big banks and predatory fintech apps operate with impunity. Garlinghouse is calling out the hypocrisy. The government is cracking down on crypto, but letting influencer finance apps exploit millions of young investors. But here's the reality, the regulatory tide is turning. The 2024 election cycle has made financial regulation a top issue, and politicians on both sides of the aisle are now targeting influencer finance as a way to appeal to voters. We're seeing new legislation introduced in Congress that would hold influencers liable for financial promotions, require stricter disclosures, and ban the marketing of credit products to minors. This is going to have a massive impact on social media, on fintech, and on the entire creator economy. Influencers who promote financial products will now face massive legal liability. Fintech apps that target young investors will face unprecedented regulation, and the entire finfluencer industry is going to be completely reshaped. But let's be clear, this is a long time coming. For years, we've seen influencers use their massive platforms to promote high-risk, predatory financial products to their followers, with zero accountability. We've seen kids get into debt, lose their life savings, and get scammed by people they trust on social media. And now, regulators are finally stepping in to put a stop to it. Now, you might be thinking, okay, Eric, one is a geopolitical oil crisis, the other is a regulatory crackdown on influencer apps. Why are we talking about them together? Because these two crises are not separate. They are two sides of the same coin, and they are colliding to create a perfect storm that is destroying wealth for everyday Americans and reshaping the global financial system. Let's start with the cost side. The geopolitical crisis in the Middle East is driving up oil prices, which is driving up inflation, which is driving up the cost of living for every single American. Your gas prices are going up, your grocery bills are going up, your utility bills are going up, your rent is going up. All of this is tied directly to the price of oil and the risk of a Middle East conflict. That's the cost side of the equation. Now, the entry side, the influencer finance bubble. For years, everyday Americans, especially young Americans, have been sold a lie that you can get rich quick by following influencers, trading meme stocks, investing in crypto, and using fintech apps. We've seen millions of young people get lured into high-risk investments, predatory loans, and get-rich-quick schemes, all promoted by influencers they trust. And now, with inflation spiking, interest rates staying high, and the economy slowing, those risky investments are blowing up. We're seeing crypto crashes, meme stock collapses, fintech app failures, and millions of young people facing debt, bankruptcy, and financial ruin. So you have a perfect storm. On one side, your cost of living is skyrocketing because of oil prices and inflation. On the other side, the get-rich-quick schemes that you were sold by influencers are collapsing, leaving you with no way to keep up with the rising costs. That's the double whammy that's hitting Main Street harder than ever before. But it's not just young people. This is impacting every generation. Baby boomers are seeing their retirement savings hit by market volatility from geopolitical risk. Gen X is seeing their home equity threatened by higher for longer rates. Gen Z and millennials are seeing their cost of living explode, while their investments collapse. This is a crisis that is impacting every single American, regardless of age, income, or background. And let's talk about the Federal Reserve's impossible position. The Fed is stuck between a rock and a hard place. If they cut rates to stimulate the economy, they risk reigniting inflation, which is already being pushed up by oil prices. If they keep rates high to fight inflation, they risk crashing the housing market, the stock market, and the economy, which will lead to mass unemployment and a recession. This is the Fed's worst nightmare, a supply-side inflation shock from oil prices, combined with a credit crisis from private credit and influencer finance, all at the same time. There is no good policy outcome here. Any move the Fed makes will have massive unintended consequences, and that's why we're seeing such extreme volatility in the markets. But let's be clear, this isn't just a US problem. This is a global problem. European economies are already on the brink of recession, and higher oil prices will push them over the edge. Emerging markets, which are heavily dependent on oil imports, will see their currencies collapse, inflation skyrocket, and debt crises explode. This is a global financial storm, and no country is immune. Okay, so we've laid out the crisis. Now, let's talk about solutions. What can you do right now to protect your wealth, navigate this perfect storm, and even position yourself to profit from the chaos? First and foremost, prioritize cash flow and liquidity above all else. In a world of high inflation, high interest rates, and market volatility, cash is king. You need to have a robust emergency fund, 6 to 12 months of living expenses, in a high-yield savings account. You need to pay off high-interest debt, especially credit card debt, personal loans, and payday loans. Because if rates stay high, that debt is only going to get more expensive, and it will eat away at your wealth. Second, hedge against inflation and geopolitical risk. We're talking about allocating a portion of your portfolio to hard assets that hold their value during inflation and crisis. Gold is the ultimate safe haven, and we're seeing it hit all-time highs for a reason. I recommend allocating 5 to 10% of your portfolio to physical gold or gold ETFs like GLD Bitcoin as a digital safe haven is also a good hedge, but only allocate a small portion, 1 to 3%, because of its volatility. Commodities, especially oil and energy stocks, are also a good hedge against rising oil prices. Third, avoid high-risk, influencer-promoted financial products. This is non-negotiable. If an influencer is promoting a financial product, whether it's a fintech app, a crypto coin, a meme stock, or a trading platform, you need to run the other way. Do your own due diligence, work with a fiduciary financial advisor, and never invest in something you don't understand. The influencer is getting paid to promote that product, and they don't care if you lose your money. Fourth, position your portfolio for higher for longer rates. The Fed is not going to cut rates anytime soon, not with oil prices spiking and inflation reigniting. So you need to invest in assets that perform well in a high-rate environment. That means short-term treasury bonds, which are now yielding 5% plus risk-free. That means financial stocks, especially big banks, which benefit from higher net interest margins. That means value stocks, which are less sensitive to interest rates than growth stocks. Fifth, protect yourself from predatory finance. If you're a parent, talk to your kids about financial literacy. Teach them about the dangers of influencer finance, the risks of debt, and the importance of saving and investing for the long term. If you're a young investor, educate yourself. Read books on personal finance, take courses, and never trust someone on social media who promises to make you rich quick. Sixth, diversify your income streams. In a world of economic uncertainty, relying on a single job or a single source of income is risky. Start a side hustle, invest in passive income streams like rental properties or dividend stocks, and build multiple sources of income that can withstand a recession. Now, let's zoom out and look at the big picture. What does all of this mean for the future of the global financial system? We are witnessing a fundamental restructuring of the global financial order. For the last 40 years, we've lived in a world of low inflation, low interest rates, and globalization. But that world is gone. We're now entering a new era of high inflation, high interest rates, deglobalization, and geopolitical conflict. The Middle East conflict is accelerating this shift, as countries move away from the US dollar and towards alternative currencies, as they seek to insulate themselves from US sanctions and geopolitical risk. The influencer finance crackdown is accelerating the shift towards stricter financial regulation, as governments around the world move to protect consumers from predatory financial products, and this shift is not temporary. It's a permanent change. The days of 0% interest rates, free money, and get-rich-quick schemes are over. We're entering a new era of financial responsibility, where hard work, saving, and investing for the long term are rewarded, and speculation and predatory finance are punished. But here's the good news, this crisis is also an opportunity. It's an opportunity to clean up the financial system, to protect consumers, to build a more stable and equitable economy. It's an opportunity for investors who are prepared, who do their due diligence, and who position themselves correctly to build massive wealth in the years ahead. 2026's first quarter is in the books, and this April is already giving us a wake-up call. We're facing a perfect storm of geopolitical risk, inflation shock, and regulatory reckoning, and it's going to reshape markets for the rest of the year. The key takeaway is simple: in this environment, protecting your cash flow and your wealth is more important than chasing high returns. Don't get lured into influencer-promoted get-rich-quick schemes. Don't take on unnecessary risk. Hedge against inflation, build your emergency fund, and invest for the long term. Now, I want to hear from you. With oil prices potentially spiking past $100 a barrel, and the influencer finance bubble collapsing, which one are you more worried about? Drop your answer in the comments below. I read every single comment, and I'll be responding to the top ones in my next video. If you found this analysis helpful, hit the like button, subscribe to the channel, and ring the notification bell so you never miss an update. And if you want to dive deeper into your personal investment strategy, check out the link in the description. To join the Market Meridian community, where we share exclusive analysis, portfolio strategies, and live Q&As every single week. Thank you for watching, stay safe out there, and I'll see you in the next one.